Holy shit, Silicon Valley Bank collapse. This reminds me of the 2008 financial crisis we had. And, I'm hoping this is not the case. From what I heard, a lot of experts are saying this is a one-off. It's not something that will create a domino effects, but no one really knows for sure. Now, I have gathered some facts of what actually happened between Wednesday and Friday. The one stock that stood out to me was Charles Schwab, and Charles Schwab is one of the brokerage firm I have right now. Schwab stock price plummeted about 20%. On Wednesday, March 8th, it closed at $76.20. And then as of Friday, it closed at $58.70. So that's about a 22% drop. And also in the cryptocurrency space, it's really rare that this happened, but USDC stablecoin is a virtual currency, and it's supposed to peg against our US currency dollar of $1. But what happened was, because there was so much panic of Silicon Valley Bank collapse, that many people had also withdrew money out, and it causes the peg to not be $1 anymore. It was actually some of these cryptocurrency sites that I've witnessed, like Binance US, Crypto.com, they have shown price of USDC that dropped close to 80 cents. But now it looks like it had bounced back to close to $1 now. But that right there shows that these so-called stable coins, they're not really stable. And let me read off some facts too. For Silicon Valley Bank, also known as SVB, they had to sell $21 billion, mostly in US Treasury bonds. Out of this $21 billion security sale, they had netted in a $1.8 billion net loss. The root cause for the $1.8 billion loss is because SVB now has to sell the bonds at the face value. And because there's a rise in interest rate, the bonds that were issued out last year is actually below par. The market value doesn't worth as much as what it was once issued. And in order for SVB to free up the cash, they had to sell it at a loss below par. Most banks probably anticipated a certain amount of withdrawal from customers, but if everyone withdraw the money all at once, then they really don't have enough cash reserve. Therefore, they would have to get money elsewhere. And, the fastest way to liquidate their assets is through bonds. Silicon Valley Bank previous 10-year treasury notes on average yielded a 2.11% return. The more recent 10-year treasury note on average yields 3.9%. So that's about a 1.79% difference. Any bonds that were issued out last year yielded 1.79% less. The next thing I was thinking of, is this something that will affect you? The answer is maybe, right? You would have to check and see what kind of stocks do you have, and if, let's say, some of your stocks company have money in Silicon Valley Bank, the question is how much, typically most corporations would not include all of their cash assets with one bank. A lot of time they'll spread it out or maybe allocate a small percentage for each bank. So, just in case in an event where if the bank do collapse, the companies still have most of their assets from other banks. And also, it also comes down to how much money is insured by the government, right? So how much of it is it FDIC insured? The typical FDIC is up to $250,000. For bigger companies, there are higher limits for FDIC that could go to $1 million. Only way to know for sure is to check your company and see if they may have issued some statements where they have money tied in with Silicon Valley Bank. The next question you might be asking is, why does this matter if a company I own have money with Silicon Valley Bank? Well, you have to think about if one of your stock company is using Silicon Valley Bank to store their cash. Cash is part of the quarterly financial statements investors read, and one of them is a balance sheet. So the balance sheet will display cash. And if your stock company cannot recuperate some money from Silicon Bank because they don't have enough money to pay everyone off, then that could result in the loss of cash. It may make it more difficult for that company to get their cash out to, and no one knows how much time it will take. So, that's just something to keep in mind, is do some research and see if the stocks you own have money currently tied with Silicon Valley Bank. Me personally, I have Schwab as my brokerage. So I'm not too concerned with Schwab, Now, even though the stock price was hammered, by no means do I own any stocks in Schwab, but I have Schwab as my bank account for my 401k as well as my rollover IRA. It just sucks that this happens because it looks like the stock market was bouncing back up. And then, recently you had that FTX collapse. And now you have the Silicon Valley Bank collapse. Yeah, that's all I had. I just wanted to get that out there to speak my thoughts. But yeah, please comment below and let me know what you think. I'm curious to know your opinions as well. As always, there are 1,000 ways to make money. Cha-ching!